Everyone, good deal, good deal. We appreciate you guys taking the time to join us today. We've got a great crowd in the room. Appreciate you guys being here with us. We'll go ahead and get started. Give me just 1 second to set up the recording. All right, well, welcome to tradingpub.com's half-day class. We appreciate you guys taking the time to be here. Real quick, before we get started, give you 3 quick disclaimers. Number 1, trading is risky. Past performance does not always equal future results. Number 2, we really want you guys to learn a lot, so we do our best to book quality speakers. And then number 3, we can neither confirm nor deny that the NSA is not watching you watching this webinar. Yes, BH, this is the class for candlesticks, gaps, and key numbers. So again, this is the class that you're looking for. So real quick, tell you a little bit about Trading Pub. Our mission is obviously to teach you guys about the markets. We want you guys to learn from top traders in the industry. We want you to enjoy your time here. Let's see, Don, you're only seeing the chat screen. Try hitting F5 or try logging out and back in. So again, either F5 or logging out and back in. We want you to enjoy your time here, and then also we want to put a focus on charitable giving, and 10% of any revenues that are generated through Trading Pub are donated to charity. Our education is located at tradingpub.com. So again, you can go to www.tradingpub.com. We're on Twitter at twitter.com/tradingpub, and then facebook.com/tradingpub. Our YouTube channel is youtube.com/tradingpub. So yes, we are recording. If you want to subscribe to our YouTube channel, basically go to youtube.com/tradingpub and you hit subscribe. All right. Our latest and greatest thing that we launched this week, actually, or last week, is a new site called marketdeal.com that provides a free trade of the week idea that you guys, if you're interested, can access at marketdeal.com. So again, we're excited about that launch and providing that. All right, real quick, before we get started, I want to ask you guys a question. Who wants to win $100 today? So let's see if anybody wants to. Okay. All right, so here's what we're going to do. We're going to do a trivia question in order to do this. And basically the rules of trivia, the first person to type in the answer wins, okay? Rule number 2, don't complain if you were too slow. And rule number 3, just to kind of give you an idea, when I go to the next slide, you're going to see a picture and it's going to describe something. And so you have to type in what that picture is trying to describe. Does that make sense to everybody? Type in a yes. Let me make sure you're following with me. Okay. All right, and here's the deal. If you win, I'll let you, the first person to type it in correctly will win, and I'll give you our email that you can send us, and we can either PayPal you or shoot you a check. But again, all right, so everybody's ready for the trivia? Okay, here we go. Here's the trivia. It's a famous golf course. Okay, Lisa got it. Wow, that was fast, Lisa. All right, Lisa Parkinson, shoot us an email, support@tradingpub.com. And if you have a PayPal address, we'll PayPal you the money. If not, you can just shoot us your address. We'll drop you $100 in the mail. So congratulations, Lisa, being on your game. Just thought that'd be kind of a fun thing to do to get things started. All right, at this time, what I'm going to do is I'm going to turn things over to our first speaker, Chuck Crow. Chuck is the key numbers expert at DTI and does an outstanding job pegging the market. He's going to talk to you guys about some key numbers in the current market, as well as the fact of how he trades that market in a way that you guys can things over to you, and appreciate you being here.
All right, thank you, Morgan. And first of all, good morning, everyone. I want to thank all of you in attendance for joining us this morning. It's early Saturday morning, especially for those of you out on the West Coast. I guess for those of you in Europe, it's afternoon, so welcome around the world. Now, first of all, thank you, Trading Pub, for giving us this opportunity. But let's just jump straight into this and talk about some numbers, guys. We have a limited amount of time to go through here. So what we're going to be looking at is some of the numbers to consider for the second half of 2013. And, of course, there's the big risk disclaimer. You saw Morgan highlight this. There is a high degree of risk in trading. Past performance not necessarily indicative of future results, and use this information. The last time I was in here, which was in April, we talked about some of the goals that we were looking at going into the month of May, or at the end of May, coming into June, and we were looking at the idea that the market could indeed rally past 1685.75, which it didn't, or it could retrace to 1648, which it did, and that 1648 number became very important as we closed out May and going into the month. High for the month of June in the S&P futures was 1649, so that 1648 retracement level was a pretty big one. I'm going to show you how we came up with that as we go through this session. Now, also understanding that June was the last month of the second quarter, and that could provide a possible change in direction, which we did end up seeing that. Now, highlights to and be aware of. CPR is a study that we're going to be looking at and going through, but very simply, we're looking at change as a percent of range. The change in the market over a set time period as a percent of the range of that market, the range being the difference between the high and the low, the change being the difference between the open and close. Healthy CPR readings that give us an idea of the strength, the capability of the market to continue its move. A healthy CPR reading should be positive 62%. That's actually not a good reading. And the number that we use to get that 1648 is our CPR projection, which is a 50% value in terms of market price. So if you take the range of a market, and here's June, just to give you an idea. This is the month that we just finished, and I've got 6 different markets up here: the E-mini S&P, the Dow futures, the Nasdaq futures, the DAX, which is the German futures index, and the Eurostoxx, Dow Jones Eurostoxx Top 50 Index, which measures the Eurozone. Those are the countries in in Europe that participate in use of the euro. And then the Russell 2000, which small caps, most of you are familiar with that. Now, as we look through these numbers, and just going to go through it piece by piece, you've got your E-mini S&P 1629.50 open. Their close was at 1596.75, so really within the past week. 1581.625. So the fact that the market rallied up at the end of the week and managed to post up gains kept it from being placed into an oversold condition. Now you'll notice there's a red highlighted number over here at the Eurostoxx, and let me just get a pointer up. Eurostoxx right here actually did come up being oversold and shows a retracement level at 2606.5. So that's going to be a big number for us as we get into July and how the second half of the year performs. Is the Eurostoxx going to be able to recover a little bit, get to that 2606.5? That's the big question right now. Really, when you look at the rest of the markets, especially for the month of June, there aren't that many questions. It seems to be a market that has resolved itself to some extent. I want to keep going here and let's see, talk a little bit about how we can use some of this information, and a great trading platform is Nadex. And many people probably aren't that familiar with Nadex. They're relatively new, but let me just take a poll in the room. How many of you have ever traded on Nadex before? I want to figure out who I'm talking to. So I'm getting a whole bunch of no's, a few scattered yeses. So let's go through some. Now, the Nadex platform is a defined risk platform, and we get to look at markets on a longer term view. We can also look at them on a short term view, but basically the goal is establish what you expect to see from the market and be able to basically corner the market and get a small risk investment to sort of build capital. So what we're looking at is we want to see if the market can run to these goals. You know, we'll set goals for what we expect to see, like that 5606 in the Euro stocks. Now, the Euro stocks is actually not offered by Nadex, but we'll take a look at a few other markets that are. They have weekly binaries that allow us to take a much longer term view of the marketplace. Now let's go in and quick definition of Nadex. North American Derivatives Exchange. They're CFTC registered electronic futures exchange. DCM, which is a designated contract market, and DCO, derivatives clearing organization. Now, to be honest, for traders, that really doesn't mean that much, but the part that does is that the contracts are designed for the retail trader. We've got low cost of entry, limited risk, fully collateralized contracts. When you're trading a futures contract, for example, an S&P future, which I can get into an S&P futures contract for generally intraday margins going to be anywhere from $500 to $2,000 depending on your broker. And that is about a $75,000 contract, a little bit more than that. So $75,000. Now, the reality is the exchange is going to shut you down before it goes that far, but that is the risk that you have. If you're in a stock buying on 50% margin, you can lose more than what you have in your account. So one of the nice things about Nadex is that to get into the trade, you put all your risk up front, and it is limited risk. Now, they're the only U.S. exchange that accepts direct retail members. We get to trade on just about any exchange we want, but when you actually purchase or when you put down the money for a Nadex account, you're becoming a member of the exchange. So it gives you sort of the same capabilities that the big boys up in Chicago and New York would have. All right, let's keep going here. As far as the cost, which is always important when you look at trading, no membership fee, initial deposit of only $100, and then you have exchange fees, which are essentially your commissions in and out. Now, you don't actually have an individual broker here, and this is the part about being a member of the exchange. There's no one that's brokering that deal for you, so the only thing that you do pay is the exchange fees. And it's per lot, which means to get into the trade and to get out of the trade, the total is only 90 cents. So, which means if I'm doing more than 10 contracts, then I'm still only paying $9. At 10 contracts, I pay $9. At 11 contracts, I pay $9. Okay. Now, binary options, kind of fun and interesting little tools. It's a simple short-term contract. We can look at it intraday, daily, and weekly. Limited risk, fully collateralized contracts, yes or no proposition. And we can trade these long or short. I want to, let's see, I want to go ahead and get back to some of the numbers and then come back to how we can place this. These are some of our numbers that we're looking at, or that we were looking at as we got into the second quarter this year. This is the first quarter numbers, very similar to that slide I was showing you earlier. We saw the S&P. I'm going to stick to the S&P, but you can basically read this in all the markets here. S&P opened the year at 1443, traded up to 1564.50 in the first quarter. We traded as low as 1430 back in January, and we finished out the first quarter at 1563.75. Now, the first quarter of this year was an extremely strong quarter. We're looking at a market that in a 3-month time period moved up 8.37%, and you'll notice the CPR number here, 95.45%. And for the quarter, we were overbought to a great extent, looking at 1506.13 as a possible retracement. We haven't made it that far back. The furthest we've come back is 1553. But if you compare that first quarter to what we have in the second quarter, it's a completely different market. And that's the first thing that we have to realize as traders is we're going into July. This is not the same market that we had going into April. Going into April, everybody was screaming about the market was overbought. It was going up too high, too far, too fast. Might be rolling your eyes a little bit about that too high, too far, too fast. I think the first time I heard that was late April of 2009 after the market had bounced off the 665.75 all-time low. The fact of the matter is when it comes to markets, they're going to do what they want to do, and it's not our job to try and dictate to them what they should do. It's our job to try and understand what they could do. So as we look at our second quarter numbers here, just going through the basics, and then we'll get into how we can play around with these. I'm going to get us over to the desktop sharing after I've hit most of these slides. But we have an open of the quarter at 1563. We traded up to 1685.75, which is an all-time high for the S&P futures. The low was 1530.75 for the quarter. We ended up closing at 1596.25. Now, of note here, you'll notice there's no red highlights. We have a range in the S&P of 155 points. The market up 33.25 points from the open of the quarter to the close. CPR readings 21.45%, and the big projection number here at 1640.50 assumes that if the market had continued climbing and had stayed above 1640, then it would have been regarded as overbought, but it didn't. So we're actually looking at a very stable marketplace. And many people have been talking about how weak Europe is, right? If you've been watching the markets lately, you've certainly heard about how Europe is so weak compared to the US, which was up 1.88%. Now, there's no doubt that the U.S. markets outperformed the European markets, but it's not by the margin that everybody considers. Sometimes when you look at statistics, you can't look at just what you want to see to prove your story. You have to look at the whole picture. And the whole picture, at least for the second quarter, was a very balanced market. And I got to be honest with you, as I looked at those numbers Friday evening and early again this morning, I was a little bit shocked to see that the European markets were. Now, they didn't have as good of a first quarter. You can go back to that first quarter and take a look at those numbers there. Obviously, with an S&P up 8.3% and a DAX only up 1.2% and the Euro Stocks market down 3.9%, that's where you get that big difference. But for the second quarter, things were pretty stable. move over to the next slide here, which is so far in 2013. And when we put those two quarters together, we do see that weakness in Europe that everybody's talking about. And we see that strength in the U.S. markets. And you can also see that for the entirety of the first half of the year, that CPR number, which is an important one here, is now sitting at 1566.75, which means that the market, the EMA 5, then it's going to be considered overbought. So at some point, we want to see if the market can pull back below that level, kind of even things out a little bit, slow down, kind of like it did in the second quarter, and see where things move forward. All right, let me jump over here. Let's see. Plan your trading week. These are basically the pitch slides. You know what? Let's stop for a second. Move over to desktop sharing. And I want to take the slides down and kind of talk to you a little bit about the market in front of us. You guys ready for that? See what's going on in the actual marketplace? All right. So we're going to have fun with numbers. And I've got a little spreadsheet that I use which creates some of those slides that we were looking at. But this is what we were looking at the beginning of June with 1629 Nasdaq, DAX, Eurostoxx, and the Russell 2000 over here. Now, when we're looking at a market, we want to understand what potential moves exist. Now, it's easy to go back and say, did you see on Friday the way the Russell futures was very strong? Did everybody see how Nasdaq at 28.99 was actually a lot weaker? So the Nasdaq was weak. We go to the DAX. It opened the trading day at 8,000. Pretty much in line with what we were seeing on the Nasdaq. A little bit weaker than that. And then the Eurostoxx way down here at 26.19, right around that 26.21 level, would have been 69. But then we opened the Russell futures at 975.5. And that was actually the only market that you had coming into the trade date on Friday that had a chance of challenging the open of the month. The Russell had a chance for the month of June to be positive. So what we look at then is we would go into our Nadex platform, and unfortunately the platform shut down, but we would look at the contracts, and you would have they don't show me the futures binaries, but you would show a binary contract which basically has a strike price, a lot like an option. And the proposition is that the market is going to get above or below that number. In fact, we can use the non-farm payrolls here to see what we're looking at. When we're looking at these non-farm payrolls, a futures contract would look very similar. The proposition is non-farm payrolls are greater than or equal to 22,000. That market's closed right now, would expire on July 5th, so that's going to be for the news coming out on Friday. And you've got your bid and your offer. Now, what you're looking at with these events is a 100% proposition. So if we close above, or in the non-farm payroll case, if you have more than 190,000 is the number, then that's going to be 100%. If you have less, it's 0%. Throughout the trading day, that percentage is going to drop and climb depending on what the expectation is. So if I wanted to go back to a market like the Russell and say that I felt there was a good chance that the Russell could get up to 981.7 at some point in the trading day, I could actually buy a 981 strike. Now, at one point in the trading day, if you look at the Russell contract here, we actually got all the way up to 982.1, which means if I had bought that at 30% on the previous day, or even earlier in that day, and then we climb up to 979.9, 980.2. So if when we're trading down here, you say, well, I think the Russell can get up and challenge that open of the month, because of course it's, at this point, within striking distance of it, then we see the market climb up. We see that 30% climb up to where that percentage gets a little bit stronger, and we can sell that out, contract out. It's a $10 profit. Now, in actuality, the risk on that was about $30. And I understand that, with Nadex closed, I'm not able to actually show you that, so you have to sort of follow along with my voice. I want to make sure that everybody's keeping up with what I'm saying. But we're basically, to really get into them, we have to know what numbers we want to pay attention to. Okay, the Nadex contract is a 100% proposition. You're basically saying that you expect the market to close above executing trades. And obviously, as you get close to the number, if you're right at the number, you're probably going to be seeing 50-50. So there'll be bids at about 45, offers at about 55, and the trading going on in between there. As you come below the number, because it's 100% to be above, those bids are going to be dropping down, the offers dropping down, the percentages drop down to the point at which it would be almost 0% chance that the market's going to get above that number. If the market climbs up and extends past the number and gets far enough above it to where you don't expect it to move back down, then that contract is going to be at 100%. So you trade the zero works. So if we can identify an important number, as we had with the Russell on Friday at 981.7 being the open of the month, and we had a strike at 981, that became an important number. How does the market move around that particular number? It becomes a big issue. Like with options, when you have decaying time, the same is true with these binary contracts. It's because they expire at a certain time period. And also, the market has to deal with the fact that it's going to be closing at a certain time period. So we had a big issue less than 24 hours ago as we were closing out Friday's market. That Russell futures contract couldn't make the move to 981.7. At 1 o'clock in the afternoon, 1 to 176.6, and remember it opened at 975.5, made another attempt to go up, couldn't get above 980, and all of a sudden you've got a half hour, less than a half hour, till the cash market closes. In fact, it happened with about 15 minutes to the cash market close, and people realize, why would you be a buyer? You know you're heading into a negative month. And so all that push that was moving in to drive the market higher, and those binary contracts that were setting in, they all start turning the other way. The percentages go the other way. So by identifying the number and understanding what you're trying to get, binary, we would have known to not be in that contract at that point, to take profits out. If you're thinking the market's going up to 981.7, that became a losing proposition as time started working against you. Now, and that's just kind of the Russell short term for those of you who are watching the market on Friday. On a larger term, let me take you back in the slides. I'm not going to move the main slideshow back. Take you back in the slides, and the goals, retracement to 1648 was one of the big things that we were looking for as we were closing out the month of May. And let's go to a daily chart for the E-mini S&P. Well, hang on. Let me change this to a continuous contract. We had rollover in the month of June, so that's going to sort of mess everything up. Now, how many of you are futures traders, by the way? When I say rollover, does everybody know what I'm talking about? Okay. Most of you are futures traders. Well, essentially, a futures contract is where the market will be at this specific date. And we trade quarterly contracts with index futures. There's the March contract, June contract, September contract, December contract. The one that just recently expired was the June contract. So that June contract going into expiration is, I mean, it's a tradable product, much like a stock, and you treat it much the same way, except it's a lot more margin involved. But it is a thought of where the June contract and the September contract. Well, right now, I think that, well, actually, the June's closed right now, but let's use the September and December. I think it's probably about 6 points. So people expect the market to be 6 points lower when we get to December. Now, the 6 points, don't worry about it. It's just a matter of lower or higher. But it represents a difference in the prices. So the June contract and the September contract are not trading at the same price. So that creates a little bit of a problem when you go back and you try and look at some of the history. So we have these things called continuous contracts, which basically account for the rollover shift on rollover day. It allows us to look at history a little bit clearer. If you'd like more information on futures contracts, I'd recommend a website like cmegroup.com or Trading Pub. Which has a lot of great information. I mean, that's why you're here, right? So we've got some good numbers there. But this is the E-mini S&P continuous contract, and it includes the June contract and the September contract, and if we go back far enough, we can look at what was going on in the March contract. And the continuous contract and then we start out June 1629.50, and the market comes up to 45.75, down to 05.50, and tries to get back up through that 48. It gets to 48.50, back down 1591.75, and then back up, or at the end of May, excuse me, becomes a critical level there. Now, if you're trading the binaries on Nadex and you have a 1649 strike, when we're at 1649, that contract's worth $50. Now you sell that, you have a $50 return, a $50 risk. It's not a whole lot, but it's not meant to be a whole lot. Binary contract trading is there so that you can get into a trade with limited risk. If the market had gone all the way back up to 1685.75, the most I could have lost on that contract was $50. But we have a few other things that we can look at with Nadex. Option traders are probably familiar with bull spreads, credit spreads basically. There are bull spreads in Nadex which list out a range of prices. On the S&P, you could get about a 30.44. And my risk on that is 6 points, which means if the market goes all the way back up to 1685.75, I've lost 6 points, $6. My return on it, if the market goes all the way down, is a lot more. It's to the bottom of that spread. So if I can find a number that I can use, I can effectively get into a trade that has minimal risk. And while the return might not be as much as you would see on a big, heavily margined futures contract, in terms of what I'm risking, it could be phenomenal. I mean, you could be looking at a possible $300 trading opportunity where you're only for those who know how to do it and a lot more complicated for those who don't. I would tend to disagree with that proposition. I think it's simple as long as you keep it simple. Now, understand that simple and easy are not the same thing. Trading is not easy. If it were, well, you wouldn't be hanging out with us trying to get an extra edge. You know it without thinking. It is difficult, but it's also simple. Most of the times we like to make things complex, especially if they're difficult. If they're complex, we can understand why they're difficult. If it's simple, we don't understand why it's difficult. So it kind of messes with our heads. So we have to make trading as complicated as we can. The truth of the matter is when you're trading anything, whether it's Nadex, futures contract, option, stock, guess what, guys? If the price goes higher and you're in a long position, you make money. If the price goes lower and you're in a short position, you make money. Now, if you get the position wrong and the market goes the other way, you lose money. That's trading. That's all it is. So our job is to find ways to get into trading propositions that are not. Now I'm going to do that with the understanding. I want everybody here to understand. I don't know where the July Open is. We'll all find that out together on Sunday night. And once we find that out, things could change. But look at this number at 1596 quarter where the market closed today, or closed on Friday in the S&P futures. Interesting thing about this number, this is a really neat one. And I'm just going to use these closing numbers across the board here. Let's see, Dow at 148.13. I got about 12 minutes to wrap things up here. And I want to give enough time for questions. So I'm going to quickly run through this. 28.99 for the NASDAQ. 79.47 for the DAX. 25.97 for the Euro stocks. And 970.7. And let me just go ahead. 1596 quarter in the S&P. The reason that number is so important, for those of you who are futures traders, I want you to go ahead and tell me real quick, what was the open of the month of June? Lou, foreign currencies certainly come into play. I could do something centered on that in my next presentation if you like, or I'm sure that any of the other presenters would be capable of talking about it. But what was the open of the month of June? $1629.50. You got to be careful, guys. Remember, June opened on the June contract. We're looking at the September contract now, but again, it's the June contract that you want. So $1629.50, Maria, great job there, is the open of the month of June. Now, what was the open for the second quarter, the April open? Anybody know that one? For those of you who think that traders don't really pay attention to numbers, in the world of, oh my gosh, what a coincidence, if you look at the 1563 April open and the 1629.50 June open, what do they have in common with 1596 quarter? Okay, so you've got 1563, the April open. Type these in. 1563 is the April open. 50%. Or more importantly, 1596 quarter is exactly halfway between those two numbers. I don't necessarily think so. But when we look at what this market's been able to accomplish, the range for the month of June was 95.75. I'm going to go ahead and throw that in here. I'll need to do this later on today anyway, getting prepared for that next month. So basically, what I'm looking at is an expectation that, and I'll just give you these kind of raw numbers here, that we should be seeing some sort of support around 1576, which we'll look at maybe 1575, and some sort of resistance around 1616. Now, this is not an exact science. This is basically taking the 20-month range of the market and saying, okay, this is what we expect. Now we have to refine it a little bit to see exactly how things are going to lay out. And we want to pay attention to the fact that the market got down to 1553, it got up to 1649. There's a lot that goes in. And of course, where does the market actually open in July is kind of important. So we want to find out from the market what that looks great, but you weren't here when that happened doesn't help you. All right. We knew on Friday 981.7 in the Russell was going to be a big number. Okay, great. Market behaved the way you would expect it to. It's either going to go up to the number, or if it couldn't get to it, it was going to have a nice little sell-off. All right, great. But I didn't tell you that yesterday at this time. So those of you who are joining me today, that doesn't help you. So let's talk about what we know now. What we know now is that we closed to make some sort of a statement. So I want to pay attention to those two numbers, not because they're the open of June and the open of April, but because the way the market closed out the quarter, exactly in between those two numbers, that happened to be the open of June and the open of April, maybe I should pay attention to 1563 and 1629.50. And this is where Nadex comes in, and we can use that to set some binaries and play with that market and see, on a day when it gets close to there, is it going to break it? Now that's just we're getting to the 5-minute time period, so let me go ahead and encourage you to start typing your questions in. I'm going to go ahead and read through these next 3 slides real quick. Join us Sunday for our weekly planning session where we will show you key times and opportunities for the upcoming week. Of course, we'll have the open of the month by that point. And enter your email address at the link in the Morgan. Morgan posted up that link in the announcement. Or you can click it on the number there. And okay, well, that's going to get us over to the next presenter. So before we go to the next presenter, I think we got about 4 minutes left. Let me see if I can handle any questions. I'll leave that up there for you guys to look at. The CPR projection calculation. Well, and CPR. Okay. Well, actually, let's get back over to desktop sharing. I'll show you on the slides annual numbers here. This is what we've seen so far this year. The S&P's up 10.62%. CPR reading is at 61.92%. Now the CPR projection says where would 50% be, and that would be at 1566.75. So that's another big number to pay attention to. So if the market comes down, the market for the year is currently overbought above 1566.75. Understand that with 6 months' time, there are a lot of moving parts to this. So that number is going to change and update as you extend the range. If you don't extend the range, then that number is going to be set. So yeah, the clarification of the CPR calculation, but that's basically the range changes percent of range. You take the change in the market, which at this point in the year is 153 points, and the range of the market 247.5, and 153 is 61.92% of 247.5. That's all it is on that one. Is risk management important in trading? Absolutely. If you aren't managing risk, it's managing you. And let me go through here. How is the exchange regulated? Yeah, Paul, yeah, PFG was a lot of fun. CFTC, Morgan actually supplied the answer there. But looking back at the slides, tens of thousands of dollars, and well, then you got problems when the worst case scenario, like a PFG, happens. Now, those are worst case scenarios. Listen, there have been clearing firms around for a while, and what happened at PFG is not normal by any stretch of the imagination. Doesn't matter, though. It's the one that everybody remembers, and if you had your money there, you certainly remember it. But the great thing about a Nadex account, I can open an account and start trading in there for $100. I mean, literally. You can sign up on their website, and how to find the webinar archives. Actually, that's what Morgan said, and it's youtube.com/tradingpub. Let's see. Is Nadex comparable for options? You actually don't trade options, but what you're looking at with the binaries and with the spreads, you can do option type strategies, straddles, and things like that. So it's comparable. I wouldn't say it's exactly the same or exactly comparable, but there are comparisons to be made. Now I'm running up against the clock right here, and Morgan, I think that just about does it for me. So I think we're gonna. I'll hand it back to Morgan now. Paul, that's Nadex.
All right, great.